Hi everyone, this assignment gives us some sample numbers and has us calculate the total taxable income for a person who, let's say in my example, they're 35 years old and they're filing single. So we'll say the gross income is $60,000. That's going to land us in the 25% marginal rate. These are example numbers, guys. The marginal rates change every time somebody changes the tax rates. We'll also notice later on down with deductions and exemptions, this kind of stuff changes about every year. But we'll just pick some numbers and go with them. So we have $60,000 in gross income. That's going to land us in a 25% marginal rate. We contributed to our 401k this year. We contributed $1,850. We had student loan interest of $1,300, medical expenses of $2,500. We made charitable gifts of $1,750 and paid rent to a total of $12,200 for the year. These are our examples, so let's take those numbers and try to figure out what this person's taxable income would be. So the first thing we do is we start off with our total income. In this example, that's $60,000. The next thing we're going to do is subtract out our adjustments, and then we'll get our adjusted gross income. So we have to figure out what our adjustments are. So this is the whole tax game here, is just trying to figure out of all the expenses and income that I had, what counts as what. So I'm going to spot a couple things on this list that I think are going to count as adjustments. One is I know that I can deduct my 401k contribution that comes out usually pre-tax, but I can subtract that out of my total income. So that's going to be one. The only other thing I see here is that student loan interest, oftentimes we call it a deduction, but it's an above the line deduction. That's actually going to be an adjustment to income as well. That's the only thing I see out of this list that would count as adjustments. So I need to total these up. So that's going to give me $3,150 in adjustments. And I'm just going to put that right here. So once I have my total income and my adjustments, all I do, it's a simple subtraction problem. I say $60,000 minus the $3,150 in adjustments. That gives my adjusted gross income as $56,850. The next step is to find my deductions. This is another huge part of the tax game, is figuring out what of my expenses for the year can I actually deduct from my income. The more I can deduct, the less tax I'll end up paying. So I look down on my list over here and say, well, I already counted the 401k as an adjustment. Same thing with student loan interest. Medical expenses can be a deduction, but the caveat is that I can only deduct the amount of my medical expenses that are above 10% of my adjusted gross income. So let me see what 10% of my adjusted gross income is going to be. And I know it's going to be $5,685. The $2,500 of medical expenses I had are not going to be enough to count as a deduction. So that's not going to really work for me. I can deduct charitable gifts. So I'm going to put that on the list. And then the only other thing we have left out of our list is rent payments. Rent is not considered a deduction. It's not really anything I can use, unless I'm a business, then I can deduct lease payments. But as just an individual, it doesn't work for me. So that'll give me total deductions of $1,750. It's not a whole lot. And the way this whole thing works is after I itemize my deductions, I'll compare that to what the standard deduction is, and I'm going to want to use the larger of those two. The standard deduction here is $6,300. That's larger than $1,750, so I'm going to want to use the standard deduction. This standard deduction was for 2017. In 2018, they actually raised the standard deduction to $12,000 and they got rid of the personal exemption. So like I said, this stuff changes all the time. But the basic structure of how taxes work remains largely the same. So these examples are still good. So I'm going to take my adjusted gross income, subtract out my deductions to get me $50,550. The last thing to do is subtract out my exemption. The only one I have here, since I'm filing just as a single person here, is the personal exemption. Again, we got rid of those in 2018, and then looks like it's going to be the same thing for 2019, but that changes every time somebody new takes office and they pass a new tax bill. So to find out my total taxable income, I'm going to take the subtotal here. I'm going to subtract out my exemptions to get me total taxable income of $46,500. So you notice that's a long way from the original gross income of $60,000. So that at the end of the year, I'm paying tax just on the $46,500 rather than the entire $60,000. So that gives me a lot lower tax bill. So hopefully that helps. If you have any questions, just reach out to me.